This is Alan Bush with ADMIS. In the stock index futures, we did see some pressure in the overnight trade. This taking place after the World Bank downgraded the growth for the global economy to 2.2% from a previously expected 2.4%. Since then, though, we have seen some recovery in futures. This after the 7:30 U.S. economic reports coming in stronger than expected, at least on balance. We had retail sales coming in better. We had jobless claims also showing a decline, but the import price index showed weakness even though it was expected to come in unchanged. So those 7:30 reports somewhat supportive. However, we have seen a tendency in the past week or two for bullish economic news not to support futures for very long. And I think that will be the case again today as traders focus on Fed policy and the possibility that the Fed will soon be scaling back their quantitative easing program. Now, the consensus view calls for a September or December FOMC meeting scale back. My work suggests that the scale back could come as early as at the September meeting. In any event, it looks like the unbridled global accommodation is soon coming to an end. Over in the currencies, seeing additional short covering coming into the yen, as we see traders believing now that the Bank of Japan will not be adding any additional accommodations to their banking system. Also, we are seeing some short covering coming into the Australian dollar as we get close to the very critical 96 even level for the June Australian dollar. Longer term, though, we feel that the Australian dollar will work lower as growth in China slows. In fact, some analysts are putting out some very pessimistic predictions for the economic outlook for the Chinese economic situation. So a little more strength, possibly up to 96 in the Australian dollar, and then some pressure developing longer term. Over in the credit markets, we have some cross currents. The dominant influence, though, is the scale back of global accommodation, especially here in the U.S. One positive, though, is if there is any flight to quality strength for any geopolitical event or something of that nature that could interrupt the downtrend. So we have to be wary of any type of flight to quality event that could take futures higher. But the dominant influence still seems to be the withdrawal of QE, and I think that will take futures lower over the near term. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.
Five and 45.